you are welcome to this lecture. And in this lecture, I'll be looking at session 4 of Unit 1. And session 4 is talking about the stages of an audit process. Stages of an audit process. At the end of this session, you should be able to identify and explain the stages of an audit process. Now, we say audit is a process when we look at the definition of auditing, and these come in various stages, and that is our main focus in this lecture. Now, stages of an audit. We say auditing is a practical discipline, and in detail, each auditor differs from the other. However, each audit assignment follows a systematic approach as outlined below. So in all, we have eight stages of the audit process. There are 8, and we'll try and look at all these 8 in this session. Stage 1. The objective of the stage is to discover the background and operational system on theoretical basis. Now, the means of achieving the objective include the following. So we have selected management interview. You have to ascertain the background and the nature of the business and the record of the client. Now, you have to also make reference to procedural manual and organizational chart, and you have to draft your own system notes forming part of the first stage. Now, when you get to stage 2, the objective of this stage is to discover the operational system in practice in the client firm, and this is achieved by either your own observations, you conducting selected walkthrough tests on typical transactions, and then preparing systems to flow diagrams. This is the main objective for how you'll be able to discover the operational system and practice in the client. So you need to understand the client system before you'll be able to accept the audit. Now, stage 3. The objective of stage 3 is to discover the strength and weaknesses in the control system in detail. So you need to assess and identify what are the strengths and weaknesses in the internal control of the client. That will inform you how you are going to approach transaction, how you are going to assess and test some of the things. And this can be achieved by completing all applicable sections of the internal control questionnaire, conducting compliance tests as necessary to see whether the internal controls are working, and then preparing a memoranda on weak areas. So if you identify any weak areas, you prepare a memoranda on your own notes to guide you in how you are going to approach the audit. So that is what the stage 3 deals in and talks about. Stage 4. When you get to stage 4, the audit objective is to evaluate the relative effect of weaknesses in each major operational area. So after assessing that, yes, there are internal control weaknesses and there are some operational areas that are having this weakness, what is the effect that it will have on the financial or statement, which might affect your opinion? So you do the deep analysis and how you are going to approach, and then what, assess those weaknesses and the effect that it have on the financial statement. Now, specific tasks that you have to achieve or to achieve this particular objective include considering the effect of the weak areas with reference to materiality and compensating controls. You completing the internal control evaluation schedule after the total effect of weaknesses already noted, then reporting effects of each major weaknesses to management. So after identifying the weakness, you have to communicate it to management so that it can be worked on, it can be improved. Stage 5. With stage 5, the objective is to confirm the reliability of the record as a basis for the preparation of the final account. Now, the means of achieving this objective include preparation of the detailed audit program, specifying the nature of substantive tests and then the extent of substantive tests of transactions and balances. Now you have to also executing auditing program by applying DELT testing techniques. If you really want to achieve this reliability of record that are presented in the final account, and these must be achieved. Now stage 6. With the stage 6, the objective is to ensure that the draft financial statements are in agreement with the underlying records. Now, the means of achieving this objective includes preparing detailed year-end schedules, that is the profit or loss account schedules, and then the balance sheet, reconciling the movement of each item from the previous balance sheet position to the current balance sheet positioning. So you have to prepare this reconciliation and the movement of items from the previous year to this current year. If you're able to do these two things, you'll be able to achieve the objective of ensuring that the financial statements are in agreement with the underlying records. If they are not, then you quickly know where the problem is, and that will inform how you are going to approach or tackle that particular problem identified. Stage 7, the last but one stage. Now, the objective is to form an opinion as to whether the accounts are presented or the account as presented give a true and fair view and comply with the statutory and other requirements. The means of achieving the objective include obtaining letter of representation from the chief executive, completing verification of assets and liabilities, executing balance sheet audit program, executing analytical review, and considering effects of changes in accounting policy and post-balance sheet events. So this is what you must do before you can arrive at an opinion. Test to see whether the accounts that have been presented, they give a true and fair view and they comply with the regulatory laws and the statutory laws. Okay, now stage 8, with stage 8, which is the last stage of the audit process. Now, the objective of this final stage is to express an opinion in the audit report to members. And at this stage, the auditor reviews the draft content of the director's report, considers the need for qualification, and refers any qualification to independent parties. Then the draft final audit report for inclusion in the published account. So there are a lot of stages that the audit goes through. That's why we say it's a process from one stage to the other, from the pre-engagement stage up to the post-engagement where you have to arrive at an opinion. There are lots of things that goes into it, and as an auditor, critical attention must be paid to this if you want to give an opinion on the financial statement. So these stages must be followed. Now, the summary of the steps or the stages. We are saying that the 8 stages or the 8 steps can be summarized into 5 phases as follows. So we have the auditor should adequately plan, control, and record his work. So you should plan your work and it should come with adequate preparation. You should control what you are going to do, and there should be a record of the work you are doing. The auditor should also ascertain the enterprise's system of recording and processing transactions and assesses its adequacy as a basis for the preparation of the financial statement. You should understand the client, the systems of its operation, and then that will form the basis of their preparation of the financial statement. If you don't understand the statement, you don't understand the processes, what the entity does, it will be very difficult for you to carry out the audit effectively. Now, the third phase is the auditor should obtain relevant and reliable audit evidence sufficient to enable him to draw reasonable conclusions therefrom. So without evidence, he can't draw a conclusion, and he should make sure that the evidence that he gathers should be relevant and reliable so that he can give him the back or the sufficiency to enable him to draw conclusions from those evidences. A lack of evidence would inform the kind of opinion that the auditor have to give at the end of the day. The fourth phase is if the auditor wish to place reliance on any internal control, he should ascertain and evaluate these controls and perform compliance tests on their operations. So we said that you have to check if the internal controls in the client are actually weak or they are effectively working. Now, in a situation where they are working, the internal controls are in place, and the external auditor wish to rely on this internal control, and based on that will not do thorough testing, he has to ascertain and evaluate whether these controls are working, and then he has to perform reliance tests or compliance tests on their operations. The fifth phase is that the auditor should carry out such a review of the financial statement as is sufficient in conjunction with the conclusion drawn from the other audit evidence obtained to give him or her a reasonable basis for his or her opinion on the financial statement. So you should carry out a review your statement, review the work you have done, and this will give you some kind of substantive evidence to rely on it, and then based on that you give a reasonable opinion on the financial statement. So these are the summary of the 8 steps into 5 phases for us. So in summary, we've been able to look at the various stages of the audit process in this session, which is session 4, and we'll still continue with the remaining 2 sessions on the nature, purpose, and scope of auditing. Thank you, and see you in the next lecture.